Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. TractorZoom, delivering insights. If you're looking for a great place to see what's going on in the auction market, use TractorZoom's Iron Comps 500 independent auction houses that report daily of what's going on out there. It's a great way to see those trend lines develop and make sure that you are ahead of what's coming. Also, if you're looking for a great CRM to help your salespeople sell more stuff, go to heyarrow.com and look at Arrow CRM. Chip is with Blue Reef Agri Marketing out of Morton, Illinois, and Chip is nice enough to come on a couple times a week and talk about what's going on in the market. And Chip, we're going to talk about the cattle market here today and kind of hit on that, but I want to spend a little time talking about this input thing. I think this input deal has a lot bigger impact right now than I think it's going to have a long developing story depending on what comes from it and how farmers react to the price and how's this going to change things around. You start looking at some input costs right now, it's going to be, even with prices that we have, it's going to be, I'm going to say it's going to be tough to make a profit, but it's going to get harder and harder and harder, especially as this price of natural gas just continues to climb. With corn stocks the way they are right now and the way things look, we know we're going to be pretty tight on supply as we look at going throughout 2022. And if you go and knock out a few million acres of corn and shift more towards soybeans, you could really have a pretty big developing story on the price of corn here, especially what we see maybe coming out of Brazil and Argentina this year. So I guess what's your thoughts on that before we get too far into the protein complex?
Yeah, and I agree with you. I think it's a huge development, and I think something we've been talking to our producers on. I think a lot of people haven't spent a lot of time on it yet and are going to have a little bit of sticker shock, a lot of sticker shock when they really put a pencil to it. But we've got some severe issues out there, and it's not just here, it's worldwide. You've got essentially record high natural gas prices in Europe. It's not even winter there yet. The world seems like they want to turn away from coal and fossil fuels to some extent, and are shocked when electricity prices go through the roof in a hot summer. And so natural gas has just skyrocketed higher. Of course, Russia's sitting there saying, hey, we're pumping everything we can. We don't have any more to give. That may or may not be true. I'm not sure. But it's a worldwide phenomenon. The supply chain is part of this issue. Two of the bigger, nitrogen-producing plants in Europe have actually stopped production right now because natural gas prices are too high. South American farmers going to the field right now to plant. Their input costs for corn have at least doubled. They're saying that can be 3 to 4 times in parts of Europe right now. I'd say ours here has easily doubled so far. Now, it's only late September. There's still some time to hopefully normalize things a little bit, but I'm not real hopeful. It's just like any inflation, right? You go to a restaurant, they have a new menu, you see a price of a hamburger just went up 55 cents. You don't ever go in and open the new menu and say, "Oh, wow, they just lowered the price of this meal by $1."
Yeah,
and so it's a big deal. And I agree with you. I think you could see right now, if we were going to plant right now, I think you'd see at least 3 million less corn acres, and maybe that many more bean acres. It could throw the corn bean ratio totally out of whack. Of course, part of this puzzle is going to be how many acres of each corn and beans that the South America, Brazil, and Argentina plant. We're going to get a little more, another piece of the puzzle here a week from tomorrow with the quarterly stocks report, and that'll tell us just how tight our old crop supplies are. But this thing could be very, very tight. I just back of the envelope crunched some numbers yesterday on this, and if you take 3 million corn acres away compared to what we planted this year, and even at a 179.5 yield, which is right around trend line, and that's the biggest crop that we would have ever raised, and you take 100 million bushels out of demand, we're basically right at or slightly above a billion bushel carryout. So that's with a record crop. And so this thing is going to stay very, very tight. And the feed grain situation and wheat is very tight in the world. We're coming off this northern plains and Canadian prairie drought. It all goes hand in hand with this input thing. And $5, we've got December 22 corn actually right now at $4.96.5. And I'm going to bet when you really put a pencil to it, $4.96.5 is a losing proposition for a lot of operations right now. And so, there's nothing telling you right now, hey, we got to plant a ton of corn acres. And, again, this thing is going to take some time to play out. It's got several months to kind of play itself out and figure out, really what producers in the Northern Hemisphere are going to do. But to your point, it is a big, big deal. It could be negative to beans. It could be friendly to corn. Of course, we're coming into a La Nina year as well. The last time we had a strong La Nina year, Argentina had really poor corn production to begin with. And so, there's nothing to think that we've got to go back to $3.50, $4 corn anytime soon, at least until you get maybe, March, April, May timeframe to see how South America's crop is and how many acres we're actually going to plant here. And the input thing, we're just beginning to kind of play that thing out, and it won't be the last that we talk about it, I'm afraid. And I'm also afraid that it's only got one way to go, and that's probably not lower by spring, and it's higher.
Yeah, especially if they, the cold winter thing that I've heard a lot of people talk about and toss that around. More and more of this natural gas is going to get, pumped in for just heating sources. I mean, so if that's already under pressure now, and then you throw a cold winter on top of that, I mean, I'll tell you what, you have the makings of a kind of a disaster there when it comes to looking at fertilizer costs anyway.
Yeah, absolutely. And this most recent hurricane plays into that as well.
Yeah.
It, that was a little rougher, and it's kind of been quietly, and I'm certainly not an energy expert, okay? I don't want to lay myself off as this energy guru, but I think that very quietly that Hurricane Ida was a little rougher on, oil and gas production in the Gulf than, initially thought. There, I think, still is some wells out in the Gulf that they haven't brought back onto, full production yet. And so that's been slow, and that actually plays into this as well. So it's like when it rains, it pours. It's not just one thing. It's a multitude of things right now that are working against lower input costs. And it's, we can talk about nitrogen fertilizer, and we were kind of talking about that too, right? There's some guys, especially in the I states, you could pull back a little bit on the fertilizer aspect, but you can't go without the nitrogen. There's a direct correlation, obviously. Fertilizer gets a little iffy. There's probably some room for producers to pull back a little bit on the fertilizer side, but it's not just nitrogen fertilizer. It's it's everything that's just going up. Tires, equipment. I mean, I'm not saying anything you don't know. Parts, labor costs. Just across the board, everything's going higher. So it's not just the input side, but that seems to be where the biggest percentage gain is. And unfortunately, that's one of the higher dollar costs of a farming operation.
Yep. It's always fun to look at on the horizon and see bigger waves coming at you than you're already in. So it's
yeah, exactly.
I mean? It's just it's like one thing after another. You can't hardly catch your breath. So
exactly.
I've read plenty of articles and talked to plenty of people and people that would know this, economists and those kind of things, and everyone's acting like this is we got another year and a half of this kind of stuff before we get out of this, and it really depends on like the average pandemic last 3 years type of thing. So here we are, year and a half into this one. So we got about another year.
And I've also read here just recently for some very kind of smart people in the shipping industry, and they're saying, best case scenario, you're likely at a very minimum 12 months away from kind of getting the supply chain, normalized, and it's probably more like 18 to 24 months.
Yeah. And
that's without any additional hiccups or problems. Yeah. And so that alone is a real nightmare situation.
Yeah. Yeah, good times, man. We got plenty of stuff to keep our eye on, man. All right, so let's jump over and talk about what's going on in the protein markets here real quick. If you take a look at what's going on in the pork market, there's just some extremes there that have been all over the place. Yesterday they showed some pretty good movement on Tuesday, and but up to that they've been struggling a little bit. So I guess talk about what you see happening in the pork market.
Yeah, like you mentioned, it really kind of been on a weak note. That's seasonally not uncommon. And this time of year, September, October, November, the October and December lean hog contracts usually face a lot of weakness. You're coming off a near record highs here from a few months back, and I think on the one hand, the cutout is still north of 100. The lean index is still way above where the October contract is, and that gives us support on the big the big breaks. But the other issue that we've got going here is either late last week or early this week, they announced they found ASF in Haiti, right? It's kind of jumped from Dominican Republic to Haiti, and which they're saying now that's only 700 miles from mainland Florida. And I don't think that did the hog market any favors earlier this week. You saw some very heavy losses, at times. But you still have, I just looked here, the lean index 94.04 today. You've got the October hogs 84.37. So they're almost $10 below. And we only have, about 5.5 weeks to go on that October contract. And, there's only so low they can go. And then likewise, December sitting there at 73.60. So we've factored in a lot of bearishness. We do have some kind of interesting reports here yet this week. We've got a cold storage report, and then we have a quarterly hogs and pigs report. And so that really could be something that causes even more volatility in this hog market, depending on what we see on those reports. And those are notoriously, both of those, wildly volatile, hard to predict. Oftentimes you get some big surprises one way or the other on both of those reports, and it's kind of like machine gun. I think one of them is, the cold storage is Thursday, and the hogs and pigs is Friday, and so we're going to have a lot of information at the end of this week that is definitely going to affect not only the hog market, but the cattle market as well from that cold storage aspect.
Yep. So while we're on the cold storage aspect of that, box beef prices have kind of got beat up yesterday a little bit, or a lot of it actually. And I guess as you look at that, I mean, it's a seasonal time. Definitely there's going to be some issues there, but the box beef price has been struggling for a while. So let's talk about that a little bit.
Yeah, that's that's a hard one to gauge. We're coming off of essentially, maybe not record, but close to record high levels in the cutout, and so we've seen a big drop, which is normal this time of year, right? Once you get to Labor Day, and that's part of what plays into that seasonal weakness in the hog market. You kind of get past the heat of the summer, you get past the big demand peak, and the numbers start building. And it's no different on the cattle side, and so we have seen that normal seasonal break. But it's interesting because we came from almost record highs. Right. We've had a huge break, but as you look at this time, late September, we're still at some of the highest levels on the cutout than we ever have been. So that's a good thing. And we've talked about this too, where it's the cattle market is really set up quite differently. We talked about that October hog contract being such a discount to where the lean index is. It's kind of the opposite in the cattle side, right? The recent cash is kind of in the low 120s. That's right where the October contract's trading. So that's kind of expected. But then you've got the Decembers, $4.50-$5 above the Octobers, and then the Februarys are $9 above the October. So we're pricing in some friendly things in the cattle market, whereas in the hog side, pricing in a lot of bearishness out there. And so it's two different types of markets. That's a little bit negative. Once we do find a bottom in the box beef side, and hopefully get past some of this cow and heifer slaughter that the drought has kind of accelerated. I think that's been something that's kind of put a cap on the front end of the cattle market. We're putting some extra pounds out there because cow slaughter has been, almost record high because of the drought in the West. And I think once we get past that, there are some better things, but we also have to understand the February and the April contract sitting there at 131.47 in the Feb and 135.07 in the April. We're already pricing in some very optimistic numbers out there that are, $12, $13 above where our cash is trading right now. So it's a little bit of a dicey situation out there. Cattle producers, are notoriously optimistic and bullish. They have to be, because hardly any feeder cattle purchase is profitable at the time they purchase it. They have to kind of, buy them and hope that things turn out. And so there is some optimism out there. I think the numbers will shrink. I think that we do have some better things ahead of us, but I'm a little concerned because the futures are already anticipating that because the deferreds are so much higher. So I don't know how that'll play out. It probably limits the bullishness a little bit. I'm not saying you can't rally, but I think we really need to keep our eyes on, the bottom line and pencil the break evens and, be protective on the deferreds. I think that a year from now, I think it might get really good, but further out than people expect. It may be still a year from now before we see, the wildly bullish effects of all this cow liquidation. And that's not a 3-month fix. That's usually a multi-year situation. And, we're going to see the effects of that for several years to come, I think. And the drought's not, they haven't fixed the problem. They've got some rain in some areas, but we still have, big problems in the West with pasture and rangeland conditions. So they're not going to bounce back anytime soon.
Yeah, it is dry. It is dry out here. I mean, I've got an empty lot, just as an example. Next to my house, there's a little empty space that doesn't get watered or anything, and it's basically just dirt right now. I mean, you watch my dogs run across it. It looks like an old wagon train, movie. It just dust just coming up all over the place. So it's going to take a lot to get the rangeland back into shape. So I mean, going into next spring, you're going to need a substantial amount of moisture to bring that stuff back.
Yeah, hopefully we can get some snow, kind of get back to normal, get a big snow winter up in the mountains, and at least start the process of healing some of the drought. It's a really major deal.
Yep. Yep. Well, good stuff as usual, Chip. With all the stuff we just talked about here with input costs and those kind of things, that plan that you're working on, there's a million different moving parts in there right now that you probably need to go back and take a look at and just start making some what-if assumptions and what does that look like. And folks are working on that, Chip. They need some help from you and other folks there at Blue Reef. What's the best way to do that?
Yeah, the best way is just give us a call at the office, and that number's 309-550-7213. We'd love to chat with you. It's more important than ever to have a plan and execute it. And the financial side is getting more and more important and volatile, and it's it's not an easy sea to navigate right now.
Absolutely. Well, I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also, go to Moving Iron LLC for all things Moving Iron. Chip, thanks for being on the podcast, man.
You bet. Appreciate it, Casey.
Right on. So with that, I am Casey Seymour, Chip Nellinger. Let's move some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to agmarkets.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here.